It's the first live stream 2022. Absolutely. Time to fire up your engines. Holiday season is over. Happy New Year to each and every one of you guys. Got quite a gallery in here this evening for sure. My name is Ryan. This is the Independent Investor Channel live stream. Been doing this on YouTube a few years anyway. From an insignificant pocket in the world, just an insignificant retail investor fighting back on a system that I think I'll just say that I think we're at war. I do. I think on all fronts. I think I spend a lot of my time thinking about why I should conform to what society would deem appropriate for me, keep me in a swim lane. I don't believe that that's in my best interest. And this is where we can come together and talk about some of those things. Financial planning institutions is just one of those big things. And I've, as of late, come to the realization that big corporations and conglomerates are taking over the real estate market as well. There's no doubt about that. Jacking up the prices so high that, anybody without $500,000 in the bank, man, can't even enter into a single family home for them and their families to enjoy and look to build some wealth that way. They're taking over communities right now, and they're renting those back to people. So you guys that are homeowners, man, take some solace in that. Hold on to those assets. The whole idea here in discussing empowerment on the Independent Investor Channel is to discuss that, the philosophy of investing is so different than your deliberation on making money in other capacities. In other words, we fall in line when we justify getting into our cars at 06 in the morning and driving to work every single day, spending 10 hours a day at our jobs to be paid a salary, to trade that time for money. And that is justifiable to be that means to an end. Investing is just not like that. In a matter of seconds, you can be down hundreds of dollars and you think, man alive, this doesn't make any sense here. What am I doing? The investing game is so different in how we make money and how we justify and deliberate on what is possible when we put capital to risk in financial markets, and understanding that the fluctuation of those dollars are just part of the gig. I think what clouds the issue a lot of the times is that the very people that should be taking advantage of financial markets are those retail investors with not a lot going for them. I shared this last week and I'll share it again. This country is drowning in debt, drowning from the federal government all the way down. And it's those retail investors in those households that for some reason or another, I am not a judgmental person, but the facts are the facts. Whether it be overspending, whether it be lack of personal spending discipline, whether it be the all too often and all too prevalent disease that plagues this country of keeping up with the Joneses and always having to have the next best thing out there, irrespective of whether or not we can afford those expenditures or not, is just beyond me. And I think it speaks to perhaps maybe our upbringing. Maybe we were brought up in that manner. The more you have, the more successful you are, right? I never want to be judged on the material things that I've been able to accumulate in my life. I say the renderings of the paper pile that I have, or the digital number that I've got in my bank accounts that I declare openly on the channel, which again, it's faux pas to do that, but I think it speaks for the masses out there that can see that it's okay for a retail investor at times to break out of the rut and achieve wealth that is over and above what you would be predestined to achieve if you just fell victim to what society says you need to fall victim to. And I got to be honest with you guys, man. I put some highlights here together last week when I had the live stream with Kyle and Jason. Big thanks to those guys as well. That was a lot of fun, but I typically can't really get to the points of emphasis because it's a different dynamic when I have visitors on the channel. If there is anybody who wants to kick off the 2022 season with me, you're welcome to do so. I'll throw an invite in the group. I don't have an agenda tonight except for those highlights. And if nobody wants to come on and share 2022 with me, the first live stream, I will share those intentions with you guys. So I just dropped that in there. If you guys want to be a guest on the live stream, you certainly can. Remember, I'm coming from an insignificant corner of the world. I am just another retail investor out there. Nothing special about me. I don't, the project is special. I just happen to be the facilitator of the project. If there's any kudos or any high fives that need to be rendered for me to say, hey, Ryan, this is cool, man. This is unique in its application. I get what you're striving for, because I think all too often, we want to we want to memorialize people and we want to put them on a pedestal, and it's something that drives me up the wall. I just don't really care who you are or who you think you are specifically. What I'm more interested in is what society seems to forget all the time about individuals that make up, people who work an honest day-to-day living and are just looking to get ahead. The unique qualities, the unique skill and tradesmen out there that are scratching together a life, trying to do better for them and their families than perhaps maybe better than generations that have come before them. And I think there's an element of real, there's real value there. And I think, when somebody comes onto YouTube and says, hey, there's a stock market bubble, and there's 350,000 minions that follow that message, you cannot tell me that there's productivity that comes out of that. I'm sorry. I can memorialize the stock market all day and all night. I can tell you what it is and what it isn't. It's putting capital to risk in financial markets with the hope of financial appreciation over time. That's what it is. You want to invest or don't invest, fine. But I'll be damned if I'm going to use the stock market as a pedestal to prop me up and somehow give you some sort of insight that I don't think anybody has on the market, on where and what direction it's going to head. Okay. And I think, unfortunately, in this new realm, and perhaps maybe I'm a little too old school, maybe that's where we're evolving to, and being woke, I guess, is what will be the norm in 20 years. In understanding that maybe too much is too much with regard to the access to information, man. And I'll continue to foot stomp my beliefs, man, because I know there's a lot of people out there that resonate that maybe too much is too much. Maybe we do need to focus a little bit more on ourselves and what we can physically do in the trenches. What is it that I can physically do? I'm not talking about sitting across from a YouTuber for 20 minutes and the very contribution that I have to society is hitting the F and like button. Okay. I'm talking about physically doing something. Okay. I don't pay attention. I disengaged from a lot of news media because it was getting me down. And I'm not a down person, but it seems like, again, I talked about being at war. It seems like the powers that be would just have us all realize that everything is hopeless. There's no hope in the world. Stock market's going to zero. And you've got certain figureheads out there with huge followings that are probing right into this. Those are the very veins that are being exploited right now because they're powerful with people. It plays on people's emotions to let them know that the only solution and remedy to your stock market involvement is to pull everything out, and then you'll be fine. You'll be back to normal again, right? You'll be okay because you were called upon with the 350,000 other freaking minions on YouTube that tune in to hear a message that is speculation. The irony in the whole thing is I give it a 50-50 shot of being right. And then those 350,000 minions are going to be like, wow, how insightful was that? That's incredible. It always amazes me how people fall into this world of followership and can't just for a few seconds lead their own initiative and lead their own path. Just try to get a pen and a paper. Guys, if I showed you my desk, maybe I'm insane. I don't know. Maybe I'm insane. I mean, I've got scraps. I fill up notepads about once a month with notes and just ideas about what I'm going to do with the project, what direction we're looking to take this project in. It keeps me busy. But here's the thing, it's directly right in line with what I'm telling you guys you can do. You want to start a YouTube channel? I tell you what, man, going on 768 some odd videos, I can tell you looking back, it was something that I did not because I chose to do it. It chose me. Now, if you can relate with that level of spiritual calling to put out a YouTube channel, it better damn well not be about money. I'm telling you, you get lucky and make all kinds of money, great. But you think my motivation and root for pumping out 768 videos and 500 live streams over the course of this channel have anything to do with money? Hell, I would have quit 3 years ago. But the very root is the power of understanding, man, that even though I'm coming from a very unique and maybe insignificant corner of the world, and perhaps maybe in the eyes of society, I am in fact an insignificant voice. Insignificant. I will double down and say that if you met me, you would understand I'm just a regular fella. I feel like I'm a pretty cool guy to know. Most people disappoint the hell out of me. I say it all the time. I enjoy you folks because we're like-minded. We get to come on and, revolve around a topic that we can all kind of understand that although you can't tame it, you can become part of it for the hopes of a better future. And I think that's really the key. I think that's why the message resonates with people. I think that's why people can feel like they have some sort of an ownership over this. I give somewhat of a permission to say, hold on a sec, man, I don't have all the answers. You don't have to just take your charge from me. You can identify what it is in your program is going to work for you. Put that in place for you guys in your program. Maybe you want to add a different layer to your program. And that's the beauty of it, man, is stepping a little bit further into that empowerment realm and looking to kind of fight back a little bit. I really think that the stock market outside of real estate and the stock market itself, I think outside of those two income generating streams, if you can find a way to find some sort of a side hustle, that is key in this hustle. Because me and my wife were just talking about how it is that even a few $1,000, as frugal as we live, it's really difficult to get ahead. It really is. The temptation to spend, the temptation to get in debt because they give you a nice little piece of plastic that's good at anywhere that you go, anything that you see, anything that's gleaming on the shelf, anything that's shining bright, and you want to add that to your collection because you get a shot of dopamine for a half hour for making that expenditure, whether or not you can afford it or not, it is always looming. It's always there. And I really think the more you can kind of get inside yourself and get to that point of spiritual actualization in your life and understand those things, man, that make the most sense for you, family, health, yeah, wealth to a capacity, but I put it in a box. And that's what we talk about all the time. But dietary, right? All those things that freaking matter in this life, shit, meaning. The hell are we doing this for? I've met people that are rich and they're unhappy as hell. They're angry at everybody. they're angry at themselves. They never took the time to really find out who the hell they were. So something to think about, man, going into 2022. And you think about, well, the stock market's in a bubble and it's automatically going to burst and everything's going to go to zero. I got to be honest with you guys, 25 years in investing, I've went through a lot of downturns in the market. And here we are fighting. And the very nature of me being a participant in the market is by nature of the very pedigree that has allowed me to be in this place talking to you guys and declaring the level of wealth that we have as a retail investor. So welcome everybody to the fastest 60 minutes on YouTube, man. Welcome everybody. Appreciate seeing everybody. Happy New Year to you. Be back in just a moment. I don't say it enough on the channel. I appreciate all you guys and your staunch support of the channel. I'm going to bring Kyle on for a bit here to say hi, get his insights, man. Had him on last week as well. I enjoy the hell out of talking to Kyle. He's got a very, very advanced level application on the stock market. I'm just glad to know the guy. I'm super stoked to have him in our network of think tanks. And I can't wait for the day to actually meet this guy in person, because I think we're going to put something together real special into the future here.
What's going on?
Same old. Yeah, everything's good. You're starting off good, you know. Stock market's a little cranky. I wish I'm a little bit more pulsed in, I think, on what's going on. When I was a lot more tuned in with the news, I just don't cover it anymore, man. I find myself either engaged in my projects or something productive with my time. And I'm pretty proud of myself in 2021 for kind of making that shift a little bit, you know, just focusing on those things that matter. And a lot of people would say, well, awareness matters, man. You know, what are you doing? You sticking your head in the sand and being conveniently naive of the world. I pay attention enough to where it satisfies my palate, but I'm good. I won't let it affect me. I'm laser focused right now, man. So that's where I'm at. What about you?
Well, first, I think you underrate yourself. You come on here and you undersell yourself, brother. I mean, you're a champ. You've been around OG forever. I love it. Ended the year with you, so might as well start the year with you, man. And
Thank you.
Needless to say, I'm dealing with the positive side of it, because usually when I get locked down, it's just I have a lot more fun just working on projects. But it's been a shit show start to the year, man. I mean, this pandemic stuff is just like, I feel like this is the last hurrah where everyone's just going to get this like less deadlier version of it, because I can't express to you the amount of people in the last week I know that have COVID. I don't know if I had it. I was going through these weird, motions for a few days, and it's just, it's a shit show. It's an utter shit show right now here in Toronto, especially. But yeah, man, other than that, just getting efficient, baby. Every year getting a little more efficient. I mean, now that I've upgraded the equipment, I mean, things are easy. It's fun making more videos. It's work's doing good, squeezing a lot of interviews in between. It's been fun, man.
You're not releasing those interviews. I saw Lior's interview that you did, but you're not releasing the interviews that you're doing on your job through the channel, right? You've been pumping out a lot of content. So kudos to you, man, for doing that. You're kind of back to I kind of expect that out of you. Like I'm used to it. I mean, you're almost on a daily upload schedule, and
I don't know how I don't know how you're dealing with your job, but like, I just feel like every conversation that I find interesting is wrong for me not to be uploading to the internet when it's so easy to do today. It's just like, I think people make it harder than it has to be, but I mean, you got decent internet, you get a decent computer. Like, I can put these videos together in like 20, 30 minutes tops. So
the sheer nature of why I don't do daily uploads is because of my time commitment elsewhere. That is it. I could do daily uploads like that. I mean, I can crank out content like a machine. And you talked about the efficiency piece. For any channel creators out there, you got to learn your own efficiencies. That's part of the key, because I talked to some new YouTubers and it's like, yeah, I spent 8 hours editing that video. And it's like, okay, well, it was a phenomenal video that you put out, but were there opportunities to streamline that? And those learnings come in time. And I've got the
Well,
process down to a point, few process improvements, but yeah, I'm with you. And I do expect that out of you, man. I mean, you're kind of in the pocket. You've got a great opportunity. Take
and
it.
I'm
Make sure you're doing everything you need to do, you know?
yeah, I'm not perfect by any means, but yeah, like you're saying, I think people get paralysis by the analysis when even if it's going to be cringy content, they should just make it, because like I'm finding a lot of the shit I'm making to be incorrect, but like it forces me to like realize where I'm wrong, and it's such a good learning curve, man. It's just like I think people think they have to be this pristine something. It's not like I'm getting a lot
Yeah,
of views or anything crazy, but just the fact that these people are engaging with it, I'm learning new things. Hopefully they're
100%.
learning new things, and the market's getting a little wonky here. So I think this is going to be an entertaining year, man. I think it'll be probably one of the more interesting years over last year when things were just more consistent with big tech and everything to the upside. I think this year, just
Yep.
because I think the Fed's going to turn on the vacuum cleaner a little heavier than people probably anticipated, because
I hope so.
the hyperinflation, man, is just nuts. So it's the first time the Fed finally
It's
admitted they
necessary.
were wrong. This shit ain't transitory. They've been feeding us that bullshit for a
I
whole
saw
year.
your post. Yeah, I saw your post. It was really smart. Yeah, you're right.
So I don't know if the markets are going to go down or if they're going to flatline. I just think the volatility is going to be. I just think it's going to be interesting. I think once we get through the next quarter, things will still be good, because we're going to get the Christmas quarter, which I think is going to be phenomenal for most of these companies.
Well said.
But considering we're kind of in this weird semi-lockdown period again, like we were at the beginning of last year, and I don't know, man. I feel like this vibe of wonkiness is about to hit the market in a way that maybe people might be unprepared for, because it's just too used to money, man. 2 years of just money in your pocket, free checks. And now we're going to start raising the rates. We're going to start pulling it out. The government's going to stop doing bond purchases and all that bullshit. So it's just what happens when you put the brakes on, 40% of the money supply in a year and a few months. Changes things, for sure.
I kind of felt like in 2021 for me, a lot of my perspective on the markets and wanting to add a lot to my existing portfolio, I just didn't do a lot of that this year, man. I continued dollar cost averaging throughout the year, but as far as my appetite to just go aggressive on evolving different pockets of the portfolio, it just wasn't there for me in 2021. I just stayed the course on a lot of holdings, and I was pretty proud of myself for doing that. I don't think 2022 is going to be a whole lot different for me, other than just staying the course, looking for other things to keep my mind at bay. I mean, I'm up at 05 every morning in the gym, every single morning. I don't miss a morning. And I've learned to incorporate that so much in my life that, man, it allows me to be a better applicator. And where some people, I guess, I don't know what the pulse is of people. I mean, are people freaking out?
They call you the captain for a reason, man. I
think
sorry,
I've evolved. I appreciate that, man. I really do. But I need people to really understand, man, that I feel what you're saying about the volatility in the market now. I'm not, I always say robotic about it. These are hard-earned dollars, man. I care just as much as the next person. I don't want to see a 50% haircut on my portfolio. But what's the alternative? What's the alternative to, let's say, if the 50% is the worst case scenario, is your solution not to invest? That's crazy.
No, I think
can't do that.
I think people are going nutty, man, and I think you're making an amazing point, because like I thoroughly enjoy the insanity, but I can do it without making ridiculous decisions every day. I'm like, I don't. It's funny how much I can talk about stocks without actually trading them, but I think what you're saying is probably more prevalent to people that should be looking, especially in the inflated market that we're in 5 to 10 years out at a minimum. And if you leave a 10-year time horizon, I mean, that should suck up all the volatility. And someone made a point in our chat group. Remember what the markets were like in 2018? I mean, it was a shit show. We still had Trump in office. There was a lot of, foreign politics. There was a lot of expectation of markets declining, and now it's barely a blimp on the radar, right? So it's just a matter of stepping back and doing what you're saying and just trying to focus on things that you enjoy, maybe a little more than over analyzing the market. But I personally enjoy the chaoticness of it, but I can enjoy it at a point of emotional enjoyment rather than, you know, in adding that emotion to my portfolio and making it a serious, like, oh shit, I need to do this, this, and this all the time and play with it. I don't do a whole lot, man. I've been just taking it easy mostly. I don't even think I've sold a stock in like 6 months or something. It's been a while.
You truly do exercise a passive income profile, and you're a fairly aggressive investor with how you apply. You know, do you even own an ETF?
Yeah, I've been adding S&P. I think the S&P makes up 6%. It's a decent sized position. I just I don't know. I'm more about analyzing my accounts right now because just the finickiness of tax advantaged accounts, corporate accounts. I'm sitting down with my corporate accountant on Monday. This will be the first time where I actually kind of get a full scope of what the tax implications are on a corporate investing account and just corporate income in general, because it's so tax deduced here in Canada. Yeah, actually, it's real funny, man.
Just got it tonight.
At the beginning of every year, I kind of just re-go through my financing and just kind of up everything, even if I don't plan on using it. So like I'm trying to open up a margin account within the corporation, which is a whole nother ball game, even though I probably won't use the debt, but just to have the option, I think is more prevalent than just not having it available at all. So just stupid things like that, you know, just kind of finalizing stuff up for the beginning of the year.
It was one of my strategies for 2021. I ended up jumping on the horse the end of 2021 and reincorporating my company from a partnership to a sole proprietor. So although I've had the LLC in place for about 4 years now, now it's getting real. And so we had to reincorporate, and there will be a surgical separation of the finances. And then that'll be the bucket of the inflow. And then I'll basically pay myself once a year, once a quarter, whatever it is. You know, I don't do it for that, but I want to keep that as drawn down as I possibly can, because that's where the liability is protected. That's why you do it.
That and write-offs too, right? Like I feel like the biggest, most underrated aspect of incorporating a business, and even if you're just a small business, you're not even making capital yet, just to have a business defined to the government just allows you to write things off. Like it's funny because when I'm spending, you know, $1,900 on an iPhone, I'm only spending $1,900 on an iPhone. I don't have to make $2,200 or $2,300 to cover the tax difference on top of that, like most people are, right? Like I think that's where people miss out on like some of the huge advantages of just even not making a lot of money in a corporation, because you can still do tax deductions, which are incredible, right?
I think it's it's exciting, man. It means a lot to me. And all the equipment that's enjoyed, and like you said, you made some upgrades. You got you bought yourself a Ferrari computer. Good job.
Oh man,
you
got computer,
the Apple
desk.
Good job.
I got a raising desk here that's all glass. I absolutely love it. That's probably the biggest splurge because I know I overpaid for that, but I got, desk lights now. We got all kinds of stuff. I got even pro mics now going on like you, man. I'm joining the level of Captain Ryan.
It looks good. Yeah, everything looks good. It makes it that much more enjoyable, to be honest with you. Push through the project. I'm proud of you, man. I hate to sound condescending, man. I do, but I'm a fan of watching you guys evolve. You know, just like myself. I mean, I hold myself to just the same critical standard as you guys, and understanding that we do advocate for a lot of people who kind of tune into us because I believe that they sense our genuine approach. I mean, I'm about as genuine as they come. I sometimes scoff at some things that I don't consider very genuine on the landscape. Maybe I shouldn't do that so much, but
have an opinion. It's entertainment,
man. Opinion.
You're far too kind, in my opinion. I mean, feel free to be a little bit more brazen with yourself.
Every now and then I'll catch that's when my content is actually pretty good. That's my most enjoyable. When I hit that nerve, it's just hard to get in that vein every now and then, you know, and I especially don't do it when I have a guest. When I'm by myself, sometimes I have I have a nerve and I hit it, but I'll hit it a few times in 2022, just like I do. I'm emotional about this topic, man, and I have to sometimes be overly passionate about it so people can understand that this shit is real. Like, people need to kind of wake up in some capacities. I was there at some point in my life where I had to wake up too and figure out that you need to start this as of yesterday. And the blasé attitude that I get from a lot of people that I even talk to, it's like, now, and I'll get to it, or hey, I mean, I just talked to a colleague of mine at work. It's like, man, I got to talk to you, man. I just think we should sell everything right now and sell and buy back 3,000 from here. And I'm just like,
Oh
oh my
God,
gosh,
the pain.
it's just that fallacy of application that prohibits people from getting to where they need to be. And it's so much easier to apply if you just buy into the fundamentals of investing. It just makes it so much more difficult, because I started probing him. Well, it's like, yeah, when are you going to get back in the market? How long are you going to wait for it to go down 3,000 points? Is it going to go 3,000, or is it going to go 2,800 and then go back up again? Then you missed your entry. And he's like, oh, I never thought about any of that stuff. And it's like, well, you need to think about these things. Don't say, well, I can just sell now at all-time highs and buy back at some point in the future, because that is close to impossible to do. It's impossible.
Yeah, it takes time to catch the bug, though, man. Like, I was having this conversation with a few people, because I mean, I don't feel most people want to get in the market and lose money. And I feel like we might be heading to a market where that's going to happen. And I don't know if people can tolerate that first year, because I joke about it a lot. I mean, the first time I started investing, for the first year and 4 months, I didn't make a dime. My account dropped 40%. And it was just funny how much sticking with it really turned that shit around. But most people, man, like, I look at like my girlfriend, for example, in that March 2020 period when she started investing, because I basically forced her to, because she started seeing, like, those cap gains and how quick, like, sometimes money can come. That's when that bug kicks in. And that's when I think most people really start paying attention. But I really feel like, depending on where they're getting into the market, and like, it's the same thing with, like, with Hyliion or SPACs, like, you lead them down these directions. And though to you have the tolerance to ride these things through, and you have that 10-year time horizon, I feel like most people, if they don't get that instant hit, that they don't want to ride it out for the 2 to 3 year period that it might take to see a rebound, or like even a 5-year period where you start seeing the real fruits bear. And they don't understand that, like, the vast majority of people won't lose money if they're in the market for 20 years, but they're just like, if I don't see something like right away, like, why am I doing this? So it's kind of I feel bad for newer people, because they have to understand that they're losing an insane amount of value from their dollars sitting there anyways. Like, the purchasing power, man. I think if you told, this was a hard reality even for investors, when I was talking about in my video today, I'm like, you look at the gains I've had, you still have to wipe out 6 to 10% for the inflation last year. That's where your base return only just begins. I'm like, this market is rougher than people I think it is. They just see the numbers going up and they think that's a conclusive answer, but they don't look at dollar volatility. They don't look at the cost of goods and stuff going up around them. And then you get the people that just sit there, like you're saying, that don't want to even begin to try and make a return on their money because they're just too scared. Meanwhile, that money's just decaying faster than you could ever imagine, right? It's weird, man. It's definitely weird trying to convince people. So I try not to. I just like talking about my own stuff and arguing with people and getting in debates. I try not to. I keep trying to do two things: stop giving price targets and just talk about what I love. Because like putting a price in a date is the stupidest thing you could do. If you put a price on something, you're fine. If you put a date on something and you say it's going to go up, hopefully by this date, you're good. But the second you put a price and a date together, that's when shit will come against you eventually.
Yeah, well said. Yeah, well said.
You got to be a little careful. I don't know. I don't like, because it's so weird, man. I don't know, because I couldn't have looked at some of the companies I hold and said, hey, they were going to do this. I couldn't tell you Apple was going to be a $3 trillion company. But what I can tell you is I still hear the same shit about Apple. I've held Apple now for 7 years, and it doesn't matter. Every year on the clock, someone's going to come out and say, hey, this is too expensive for Apple. This is their last, like, hurrah. They're going to slow down. And it's like, God, I wish I could take that advice seriously, but I'm like, this could be the first year. We'll see if it happens. But to sit here and, you've been wrong literally 20 out of 20 years since Apple's been like out of the .com bubble, it's just been on a tear. So I don't know, man. It's like you're saying, it's got to be passive. You got to be patient. You got to diversify, and you just kind of got to, have that tolerance to just enjoy life outside of that market. I don't know. I hope more people start investing. I feel like this might be more sketchier because of the crypto NFTs. I feel like we could see some pretty big pullbacks in those markets if liquidity dries up. So I don't know, man. I don't know if you watch many of the NFT things, but they're making cool cats now and all kinds of crypto that can be used in metaverse games where they print more cryptocurrency that can be transferred through ETH into dollars. And like, you know what's really cool? This is probably the coolest thing. I was watching some dude play poker in Decentraland using the Oculus. So he's in the digital crypto real estate in the metaverse playing poker with cryptocurrency that can be like, just, I'm like, yo, bro, Web3 is here. I feel like people that don't understand Web3, and then there's the people that get it, and the people that get it are like, just take all my money. Like, they don't realize how far this is already. And, you know, we're early days still, but it's wildly impressive at, you know, where this stuff is going and where it is now. I mean, I love it.
In your magician days, you could garner an audience. I don't know why it is the Kyle factor. Every time you come on my live stream, I break 100. And every time I'm on here by myself, I've got like 60 or 70 patrons. So this is the Kyle factor paying
Bro, you've
off
been
right
crushing
now.
it. 60, 70 patrons. That's what I was going to say. You're underrating yourself, bro. By the end of these,
Great.
you're getting like 500 people. I mean, I'd be lucky to perform for that kind of audience.
I think, yeah, no, hey, I appreciate that. You know, please understand, I just want to make sure that the true value of what I'm trying to do with my project, it reflects what it is I want it to reflect. That's all. You know, like you said, you alluded to it. You don't give price targets. You don't give dates. You don't do, there's a reason why you've digressed from that kind of stuff, because it's not scalable, and it has the potential to maybe cause more damage. And that's just not that's what people are looking for. You and I both know that. You know, YouTube is just a conduit for instant information.
Well,
right?
let's have fun. Let's have some fun then. Let's give let's do what we don't want to do here. Let's talk. What are you predicting for this year, man? I mean, where's your interest at? I mean, I know you love Hyliion. That's still relatively cheap. What are your thoughts on maybe Chinese stocks, crypto? Where are you going here?
Yeah, so the last 2 or 3, I think crypto is really going to roll off. It has been for about a month. If anybody's noticed, it's really rolled off. I mean, Bitcoin hit that 68,000 mark, and here it is. It'll dip below 40 here pretty quick, if not this week. So it's really in a bear. I don't know if we're not quite at, you know, we're well over 20%, so we're there. We're in a crypto bear market right now. So definitely that is a set position in the portfolio. In the last 2 weeks, I have noticed a real shift into defensive. And so those elements of the portfolio specifics to utilities have done quite well. Real estate continues to really do well. Pockets of financials are doing quite well. Speculative growth is absolutely getting annihilated right now. You know, I just had ExxonMobil this week for the first time in 5 years return back to the black for me. So oil and energy is on fire. There was a nice development with the Guyana project, and Matt should be able to speak more about that, what they initially discovered 4 or 5 years ago and have been working. That project has expanded. So a lot of tailwinds behind Exxon. So for a 4.5 dividend payer, I'm continuing to hold a very big position in ExxonMobil, and that's been nice. So there are pockets. Kimberly-Clark, you know, Staples have done quite well. So there's a shift. I think maybe there's that shift. Now, this has happened before from big tech to where the big growth stuff, Google has rolled off here as of just the last week. This has happened before, and I consider them to be head fakes, and then they come right back again. So don't think for a second that this can't be just a you know, another one of those head fakes, but there is obviously some rotation coming out of those and going into some more defensive names. Like I said, the portfolio is pretty set for me with regard to the passive. I have not funded the Roth IRAs. I am not in a rush to do that right now. I will continue to monitor, build the cash fund. That was a roundabout way of picking stock. I could definitely do that, but that's kind of where I see the pulse of the market right now, is a shift to value and defensive. Now, it's going to take a little bit. If things start really accelerating to the upside, then you'll see those catch fire again, because I entered back into Apple at low 170s just on a swing. I sold a big 75 share position a couple weeks back, entered back into 25, swung trade it, profit, boom, and then entered back into it here. So I'm willing to take it into a further downturn if the rotation continues, as well as the rotation. Everything is suffering. Microsoft has rolled off. Salesforce.com has rolled off. So there's really there's a lot of growth stuff that's down 50%. Kyle, you saw that. I mean, look at Affirm. My goodness, Affirm was up to 160. Now it's God, 80 right now, 75, some 50% haircuts on some of these big growth. So
It's a shame because they're like you're saying, like, I mean, even within more of the spec plays like Hyliion, a lot of the small caps that the big YouTubers are into, like I would reasonably say that they're probably at a much better value than many of the large caps. People are still playing with them. But like you're saying, man, it's just what the market's doing. It's just these cyclical cycles, and how long they last is debatable. But I'm seeing the same things you're seeing. Like oil's looks like it's gonna continue doing great. Bank stocks, the vast majority, I mean, almost all the ones I'm having is like Christmas trees every day. They're just, one will be red and the rest will be all-time highs, and then they'll swap out and the other ones will be all-time highs.
right.
A lot of the industrials seem to be doing okay. Yeah, it's just neat because you can kind of get the sentiment right now that the market's kind of fearing this inflation pullback. Because again, this is the first time in 10 years we're going to see interest rates go up. So I just feel like you're seeing that, and I feel like it's almost a Ray Dalio situation where you're seeing a lot of the consumer distress, your Pepsis, your J&Js go up, your Cloroxes are beginning to rally, your Kimberly-Clarks. I'm more intrigued, to be honest, by the Chinese sector because I feel like it's strategically trading at the deepest discounted value against cash flow. And it's just a matter of
I agree.
If the political rhetoric slows down a bit, which it looks like it is, and the news cycle starts flipping in the better direction, which since Charlie Munger, bought another 300,000 shares of BABA, it seems to be positioning the news cycle a little better. So I'm just going to keep an eye on it. If BABA gets back to that 150 range and it looks like it's starting to break out of that slump that we've been in, I'm all in it. I just don't want to take a position out of fear. And like I said before, I'm willing to lose out on 20, 30, 40% upside so long as I know that there's a higher likelihood of a resurgence rather than buy into this decay that seems to never end. But yeah, I don't know. I love that sector a lot for value, but just like you, man, I'm sticking to the plan of constantly just buying those good kind of dividend companies. Facebook, still, like, my highest conviction this year is probably going to be Facebook. I own a lot of it now. I think it's the largest position since Tesla pulled back. So that's kind of where I got to stop buying it. I bought in too much. I think I'm 68 shares or something deep, something like that. It'd be nice to buy more. It seems so easy for me.
It'd be nice if it incurred its first split for you. That would be great.
Google would be nice if it's split. I wouldn't mind owning a little more Google if it dropped. I like Google a lot. I have a harder time wrapping my head around Google. I feel, well, I mean, their income's pretty straightforward, but I'm using this metaverse stuff. And the more I learn about the crypto metaverse stuff and how all this kind of intertwines, and I'm seeing it intertwine and I'm using it as it intertwines, and I'm kind of getting a feel for people that are using it. I don't know how you can't be bullish on it. It's just staggering to me almost that I literally hear people that don't use it. They're like, oh, this is first iteration. This isn't like that crazy. And it's like, have you tried it though? Have you been in it? Have you been like talking to people and joining them in their own metaverses and, using these cryptos? Like, this is a real interesting aspect of the internet that's just being underappreciated. Largely underappreciated, but the sales are going to show, man. I mean, Oculus, #1 downloaded app at Christmas. So let's see what those,
for sure,
those quarterly sales look like. And then we'll start seeing the in-app purchases, perhaps in-app ads. I swear Apple eventually is going to be putting their foot deeper into the metaverse. I feel like they're really Batman-y about it. I finally have the Bat Cave where if someone gets out, they get assassinated with any kind of intelligence, because people think Apple's done, but like, I don't know how Apple can trade at the valuation it trades at when in the next 5 years it'll make more than Tesla's going to be able to make, for at least the next 5 to 10 years. And I just hear so much bear cases on it. I'm like, you understand how much cash they're going to have to reinvest into these, and they know what's coming. They're not dumb. Like, they're obviously working on these self-driving cars and more than likely these metaverse projects. It's just that they have a bat cave. They're not like Tesla. They're not just going to shout it to the moon, right? I mean, they're more IP focused, clearly. And I don't know. So it's just, I like my big tech still, man. I hope it dips just for newer comers to be able to get better buying opportunities. I'm always buy those best balance sheets possible at the best rates, which is why, again, China's rather appealing. But I don't know, man. It's going to be fun, but I don't want to take up too much of your time here. I'm going to go get ready for ours in the next 15 minutes or so. And I just wanted to stop in and say hi.
I got
Always
a free
pleasure,
evening,
brother.
man. I'll kick over and be in your audience, man. I'll be a fan, Kyle. Thanks so much for spending some time and saying hi. Open door policy, man. Independent investor channel, man. You own a piece of this gig. Really appreciate you, brother.
OG, man. Really happy New Year's. Stay safe. We'll catch you in a bit. All right.
Cheers, man. Brother. Yeah, man. Later. So fantastic. That's what it's all about. You guys got a taste of the network there. Kyle's been with me now for a while, and we're trying to build something special for you guys, streamline, deliver the product a little bit more aggressively for you, a little bit easier to consume. I mean, shoot, you sit on your couch and get a financial piece. I don't know if there's a lot of opportunities out there in the mainstream media to be provided information on a topic that I can insist that people need more information on. They do. It's interesting too, because myself and Kyle's application in how we go about wealth building have fundamental similarities, but they are on the surface very, very different. And the irony is both of our strategies work very, very well. And I think there's something to be taken there in that if you're a brand new investor, you could be looking at this and saying, man, Ryan's saying it's okay to define my own path in this gig. And it is. It absolutely is. Financial markets are there for you to participate in. I do insist that there is some level of fitness. Okay. Don't think that you're going to invest your ass out of debt. Okay. Don't think that you're going to continue to be a crazy spending animal and make the stock market be the supplement to your deficiencies. I've said that many times, and I don't mean to be rude, or I don't mean to be construed as being judgmental, but there's a lot of people who need to work on their discipline before they start on a wealth building program. For a lot of people out there, they can do both at the same time, in my humble opinion. And couple bucks. There's a lot of surplus wealth out there where a lot of people will justify a lot of expenditures out there that will not get them anywhere into their future. This is one of those topics that, yeah, you have the potential to have your portfolio adjust down in value. You can tune into an investor like myself with a lot of years of experience. I've been through a lot of drawdowns in the market, a lot. And this is nothing. It's certainly not enough. It seems like every couple weeks I see the bubble title. And that was the title of this because I'm picking fun and I am entitled to do that. I absolutely just don't see value in it. So I'm going to comment on it because I think that misleads people in thinking that maybe the world is going to hell in a handbasket and maybe the stock market is going to zero. Look, Kyle mentioned interest rates going up. I've been an advocate for interest rates to go up for many years. I think them being artificially low has been really, really detrimental. And it's allowed this little bit of a scenario. If you want to call it a bubble, you can. But free money has been really the detriment. And money should not be free. The cost to borrow should always be reflective of what a customer is willing to pay for that capital. Okay, if you want that free capital, that you have two options: either you borrow it or you earn it. Okay, the idea of earning cash in the capacity that a lot of business owners, that a lot of corporations need, they have to have that flow of capital. But the lender has to be compensated as well. And I tell you what, man, banks have had a hard go at it for the last multiple years. And their recessed valuations, I mean, a lot of these big banks were trading at, book and a half, 2 times book. And they've crawled back out of the gutter. Wells Fargo in point, Citigroup is on a dip right now. And JP Morgan has had a great week this week. Some of these banks are really coming into fruition. I think the Canadian banks have had about a 3 or 4 month head start on this deal as well, because they're on fire. I think they're flirting with about 30% upside here over the last 3 months. So they've been on fire. But something to kind of monitor. I think once the initial shakeout, I think it's a sign of strength in the market. I don't think we can continue to loan money for free, just like we've done artificially over the last several years. And although on the onset, I do believe that it'll be a systemic shock to the market. Look, the market doesn't like any change at all. Anytime Jerome Powell talks, the market doesn't like it, no matter what he says. Okay, market's going to become cranky. Any type of inject on the status of the pandemic as it sits on any given day is going to be a catalyst in the market one way or the other. You notice these larger than average swings in the market from day to day. One day it's up 400, the next day it's down 500. you never can tell with these mixed numbers that are coming in how to really take that. And that's just one strategic inject. I think we're at an all-time high real estate market. I think that could end up affecting. We did just have forbearance roll off at the end of last fall. And I think people are struggling. I think people are struggling more than people want to lead on, at least from a macro perspective. I think that businesses are having a hard time finding work. And I think people really are not acknowledging that the free money inflow is not going to last forever. And people are going to have to figure out how to make that money. And I think over the large perspective, I think it's going to catch up with us. And I think there's going to be in 2022 a slight systemic shock before we can get back to normal, in understanding that this is where you want to be with your money. There is no other market that you want to be in, with regard to, where we could be. Like Kyle mentioned, the 10-year plan. If you can truly say that and buy into that idea, then what are you worried about in the short term? And right now, guys, I'm trying to share with you my perspective on where I currently am in my phase. I scour the markets all the time, and I can go off of a cuff and I release those through the channel on where I see pockets of value. But here's the thing: does it do any good for me to tell you that energy is going to continue to outperform in 2022 when the buy point on energy was April of 2021? Actually, you could go all the way back to January, was where probably the sector bottom was. Nobody was talking about energy in January of 2021. Mark my word, nobody was talking about it. So do you start to pile into some of these sectors that have outperformed in 2021, or do you take a more holistic approach and pick your pockets a little bit, and pick your pockets using that scale that I talk about all the time? This is not a time where I'm putting large chunks of capital to work in the market. Me personally, I'm just not doing that. I'm saving a lot to cash. I'm dollar cost averaging. A lot of my accounts, man, 50, $100 at a whack, are continuing to flow into the accounts for sure. All good. Good evening to you. Appreciate you. Always appreciate you guys kicking in and enjoying it, man. It was a great live stream tonight. Had a lot of fun tonight. I'm going to jump in real quick and just cover the portfolios tonight for you guys that have been kind of devout and staying with the message all the way to the end. And I'm going to do it quick. We were down kind of across the board. It's the pulse of the market right now. I garner from big tech kind of rolling off, some of the industrials and value like 3M and AT&T and Boeing. Lockheed Martin is on fire. So those three in a row right there, 4 in a row, 3M and AT&T is coming back nicely. Big money is flowing into those value plays right now. But companies like big tech, anything big techy, is really rolling off right now. Passive is taking a little bit of hit. And I know there's folks that want me to pulse in on Hyliion. Stand by. I'll come out with another coffee mug video on Hyliion. It's going to be devoted to their new product line that they're rolling out. While we wait for the EX Hybrid and the Hypertruck ERX, we're going to roll out the exclusive line of merchandise. And they're going to roll out a coffee mug. It's going to roll out and it's going to retail for $5.95. I've done the math for them on Twitter and explained to them that they need to sell 300 million units to recognize that 1.5 billion of revenue that they promised investors in their investor presentation. So I'll be coming out with something like that, just to always challenge the system, guys. Look, the Independent Investor Channel, if there is value, and there is some credence to your enjoyment of the message, it's that my voice echoes for a lot of other people who may be feeling frustrating and feel like they don't have a voice. I provide that voice for you. But there we are on that. We were down week over week, no big deal. The Roth won. There's no changes of note in here. I'm excited at some of these holdings. They just have really been suffering. SoFi, it continues to suffer below 15. ONL, which was the spinoff of Realty Income, I'm very excited. I beefed up on that position. And Chevron is on fire. Like I mentioned, energy is just on fire. Utilities, excuse me, in this account, it's the retail sector, and the VOO continues to do okay, as today was an up day in the market. It just didn't feel like it. I think you can all agree with that. But this is Roth 1, and then Roth 2 here. Alibaba kind of made its base. ExxonMobil back in the black. Facebook had a nice day. It sold off at the end of the day today anyway, you know, live to fight another day. But the utilities ETF, I'm up 8% in that. So it really just shows kind of a flow into value. VIG, I'm up about 6%. So those two ETFs right there, kind of indicative of the times. I'm marginally down now in Royal Dutch Shell, and I'm up in the black in Kimberly-Clark, Johnson & Johnson. Anything staples, value right now is kind of making a nice little bull run. And there's some pretty good inflows into some of those. The ETF portfolio has come back under 20. So we're going to make our marks a couple times, no big deal. We are down week over week. The dividend portfolio, this is where the value is actually up week over week. So go figure. I'm really enjoying this. We just passed our 25,000 threshold in this. Next threshold in this is 50 grand. We'll continue to chronicle this. It's amazing how I look at this probably every day just from a monitoring perspective. And I think, man, you know, it doesn't grow very fast. But man, when I look back 2 years and see where we started with this, you know, $2,500 account, it's amazing how you can wealth build. Ryan, can I do it? Absolutely. Anybody can follow along this path. Whether it takes you longer or shorter amount of time is irrelevant. The fact of the matter is you can do it. And that's the key. It's irrelevant to look at it and say, well, you did it in 2 years. If I do it in 3 years, it's somehow a failure. No, you did it. The whole point is that wealth building is absolutely a scalable activity for you guys. The bond portfolio continues to do well. I fund this up with $50 a week, right? So pretty aggressive on my dollar cost averaging. I find that to be the most prudent move right now with the market volatility, and kind of straying away from new positions and lump sum allotments to this market right here. This is where I'm putting my pressure. And remember, you've got different areas of pressure that you can just push at your leisure. Look at it like that, guys. You're the administrator of your program as a self-directed investor. If I want to push the DCA and the build to cash option in my portfolio a little bit more than what I would do if we were in more of kind of a bullish type of a posture, you've got those different avenues, right, to add to. And I'm just monitoring the accounts. I've set up a lot of starting positions in a lot of these accounts. This was a new account this year, and super stoked on that. This was the first year I upped this account to 20%. It would take an additional 20%. I would need to contribute close to 40% of my pay to max this TSP out for myself. So this would take a pretty good fund up, and maybe I get there someday. Maybe I have enough surplus to do that, but I don't have that right now. 20% is pretty aggressive. Runs at about a $10,000 clip right here per year. That's what it was. It closed out 2021 as a $10,000. And then the Robinhood with the growth, obviously growth is rolled off. So this little ETF is going to suffer. I really love this ETF. If you didn't want to buy Amazon, Google, Facebook, Tesla individual, you could just buy the VUG and live to fight another day, right? So kind of a cool option right here. We'll continue to monitor that. Here's the mid caps and Webull. The Swiss F account. This has come down. I didn't adjust this amount. This is down to about 4,200 in Globex. I'm really excited about 2022 with checking out the prospects of Globex. Crypto is just in an absolute downward spiral. I've almost given back all profit. I'm sitting on 300 a profit, which I'm lucky to be sitting on that, to be honest with you. It's just taken a bloodbath right now, but I'm actually holding true on this. I'm not moving at all. This is what it is. I'm not too concerned about it. I'm not adding to it. It just is a set amount, and it will fluctuate. If it goes to zero, it goes to zero. If it goes to 25,000, it goes to 25,000. In either case, really, I'm not putting any type of metrics on this or any type of expectation either way. It just is what it is. And there's the total 503, 525 here as we've come off week over week with the weakness in the market, that's for sure. But that is what it is, guys. Really appreciate you tuning in to the Friday live stream. I just want to make sure I'm going to take just a couple of minutes of bonus time here to acknowledge how much I appreciate. If I was going to ask anything of the channel, right, I don't, there's no payment to come into the channel, but there are some opportunities that I make available through the channel, and they are vast. The independentinvestorgroup.com, independentinvestorgroup.com links on my homepage on the Independent Investor channel are easy to link over to. If you like what you hear, make no mistake, man, there's a lot of people that are showing interest in those products, as well as my Patreon group. What I've been doing behind the scenes is absolutely pumping that Patreon page full of ad-free content, and there is some exclusive content on there. You get automatic entry into my WhatsApp group. The cost is negligible. It's just the same as joining my WhatsApp group and my Viper group, the same. So I do provide those opportunities to continue the discussion. I've got a really great group of Vipers who are empowered investors looking to build their own place for themselves in their road to financial security, and we provide those options. Those are the two that I want to mention at the end of the stream, just to let folks know that we do have those opportunities out there, and I have a lot of fun, you know, engaging in those projects. So check those out if you are interested in those. We will continue to roll out those projects into 2022. Everything is open to scrutiny. But those two, I think, are the two that I would really like to expand the most. And I think they probably have the most staying power on the channel because, you know, it allows that direct engagement. We have a lot of good conversations in there. It's like having an ace up your sleeve, basically, of support. Throw ideas in there. It's a non-judgmental space. It's we've got beginning investors, and we've got some seven-figure portfolios in there. So it's not a place to be judged. It's not a place to you know, to feel bashful about starting your journey. We were all there at some point, and we're all walking an individual path on our own journey to where we're trying to take this thing. And so those opportunities are available. So thanks again to the group. I would ask you guys, man, continue this level of engagement, man. Make time to come in and hang out with us on the Independent Investor channel on Friday nights, man. 9 o'clock is my standard time of engagement here on the channel. I enjoy doing it. It's a few minutes of spiritual health and you know, financial literacy. And the more focus you can put on this, the stronger you'll be in your application, the more aware you will be, and the more stronger of an applicator you'll be for yourself. So guys, I appreciate you tuning into the live stream. We'll be back next Friday. You bet. We'll keep the streams going into 2022. Welcome everybody. Happy New Year to each and every one of you guys. Really appreciate you being with me. And we will catch you next Friday on the Independent Investor channel, fastest 60 minutes on YouTube, guys. Cheers. Take it easy.